Okay, hold on. Okay, guys. So we are going to be talking about construction loan today. This is actually one of the hot topic out there. Even though today's economy is a little bit different, construction still going on. Now, throughout the times, many people come to us asking for construction loan, purchasing a property, purchasing a piece of land, try to build on it, or we have clients that come into talking about much bigger projects, for example, like developing a community, so on and so forth. So tonight we are going to spend some time to talk about what construction loan is all about and what do we need to watch out for and what kind of documentations that we need. Okay. Now, construction loan, as we can see, it's all over the place right now. Whether you are building a single family home or you're building a community, you're building a development, you're building a neighborhood, or you are just building a retail, shopping centers, warehouses, so on and so forth. There's a lot of construction projects going on out there. And the expectation is that it's going to continue on. Yes, it will slow down. And as a matter of fact, it slowed down a lot compared to about a year and a half ago. But the project is still out there for whatever reason, okay? Definitely, the construction guideline also changed. If you came to us about 2 years ago, okay, about a year and a half ago, not even 2 years, about a year and a half ago, regardless who you are, as long as you are an investor, you have done some fix and flip before without any ground up construction, it is fine. We can find you a construction loan all day long. But today, the market has changed. We all know what's happening out there. A lot of the lenders are become more conservative when it comes to funding constructions. So tonight, we are going to talk in detail exactly what the lenders is looking for. So it does not matter where you go. You still see construction that is midway constructions, you see ground up constructions, and many of them are actually getting into fix and flips. Now, fix and flip is also part of construction. Okay, so those are the mini construction loans. So today, when we specifically talked about construction that is ground up construction, meaning that there's nothing, you just purchase a piece of land, you build on top of it. That is totally different than fix and flip. Fix and flip, you purchase a property. It's there already. The structure is there. You are not doing any ground up construction. You go in there, you fix it up, you renovate it, and you sell it. So that is called fix and flip. So today we are talking about you purchase a piece of land and from nothing to something. So that is the type of constructions that we are talking about. Now, if you do not have any experience funding a construction loan before, I know that there must be a lot of loan officers here in the room right here. If you never done any construction loan, this type of loan is not that straightforward. It's not like, oh, okay, you tell me what you want to build and I can give you a rate and term. It doesn't work that way. There are a lot of things that we need to understand before we can go out there to tell them, is this project even doable or not? Again, I apologize for my cough, okay? So when you run into a client that needs construction loan, the best thing to do is to have them to fill out the construction scenario form, regardless what type of construction that they build. Send us something, at least in that scenario form. We want to find out, what is it building? Is it building single family home? Is it building commercial? Do they own the land? How much the land costs? Is the land entitled or not? Now, when somebody's saying that, hey, I want to build, a lot of people come to us saying that, hey, Alan, I want to build, I own a piece of land. The first thing that I always, or you should always ask your client is that, is the land entitled? What does entitlement mean? Entitled means that you cannot just say, hey, I go out there and buy a piece of land and I want to build a multifamily. That is what you want to do. But can that piece of land actually allow you to, or does the city or the government allow you to build a multifamily on that piece of land? What is the zoning on that piece of land? So entitlement is very important. Now, when a piece of land is not entitled, the value normally it's very minimum, because again, we don't know what you can do with that piece of land. And once that piece of land is entitled, now the value of the land will go up dramatically, because now this piece of land, you have a purpose for it. You have a zoning for it. You know what you can build on top of it, right? So understanding that is very, very important. So the first thing that I always ask client is that piece of land entitled or not? Now, once they filled out that scenario form, we know what the land is it entitled or not? What's the construction cost, the budget, so on and so forth. And also we ask them, do they have any experience or whatsoever? So once we look at the scenario form that they submitted in, we have a pretty good idea what this client is, what are they trying to build. So from that point on, we will definitely schedule a three-way conference call. So help us out, do a three-way call. We'd like you to be on the call also, because this is how you really learn about commercial. This is hardcore commercial now. So we want you to be in the call, listen to us, listen to how we communicate with your client, how to dig out a question, how to understand the project. So the first thing that you need to do is to help us to set up a three-way conference call. Now, how do you set up a call with us? There are so many different ways. Go to your website. There it's 240-200 contact number. Text us saying that, hey, I need to schedule a call with one of the advisor for a construction loan, or send an email to us. The email is also on our webpage, support@setlending.com. So those are the ways that you let us know that you want to set up a call, and we will give you a link. We will provide you one of our advisors' calendar, and you can schedule a call with one of us. So that is very, very important for construction. Okay. All right. Now, when we talked about construction, now, if you are just talking about single family home, normally that is pretty straightforward. After you fill out the scenario form, we will normally give you two things. The first one is a construction budget. The second thing we request is a track record. Those are normally the two things that we're looking for. But I bet very soon you will run into somebody who wants to build a multifamily, wants to build a hotel, wants to build a community, a development, whatever that might be. So in that case, we need a full package. So let's go through it, exactly what we need for us to evaluate a construction program. Okay. First thing, we need to see an executive summary. We are going to go into every single detail, what they are, executive summary, what it is. Okay. The next thing that we want to see is cost breakdown, construction breakdown. Now, the construction breakdown normally consists to be different numbers. The first one that we want to see is the total cost. How much it costs for this project to be complete. The total cost, including the fund they already spent. For example, somebody saying, hey, I already spent $300,000 to purchase a piece of land. That is a cost. And they also saying, hey, after $300,000, I also spent another $200,000 to develop that land. I clean it up, I put in water, I put in electricity, so on and so forth. That $200,000, it's cost. Okay, so those are the money that he already spent on. But also, we also want to know what is the total budget. So, for example, let's say the total budget is $1 million. They already spent $500,000 to purchase the land and develop the land. Now the land is entitled. Now they need another $500,000 to build up their single family home. So again, what is that $500,000 for? So oftentimes we have people come to us saying that, hey, I need a budget. I need a construction loan. The budget is $1 million, for 800,000, 700,000. We need to break down to the line item. What exactly are that $500,000 for? So we're going to show it to you later on. Okay. So the next thing that we want to see is a pro forma Now, what is a pro forma? Now, many people right now is built to own.
Hi, Jamie, Carolyn, Heidi, got nothing for you. Grab stuff at that camp.
So they built to own. What does it mean? Many investors, they instead of purchasing a single family home, they buy a piece of land, build a single family home, and after that, they will rent it out. Same thing. They might build a multifamily, build a mixed use, build a hotel, build a retail, whatever that might be. After they build it, they're going to keep it. Now, when you keep it, the lender would like to know what is the pro forma. Pro forma is what is the projected income, how much this property can generate income for you. We're going to talk about that in detail later on. Okay, so next thing that we need to see is something called track record. So this is what we call experience. Experience is very, very important in commercial, in construction. Track record shows to the lender what kind of experience that you have. You're asking for a $10 million loan. You're asking for a $5 million loan. It's a lot of money. Yes, the project might be good, but what about the principal? Do you have what it takes to get the project to the finish line? That is very important also. So track record is the next thing that the lender will look for. And last but not least, it's what we call personal financial statement. Lender would like to know what kind of liquidity that you have. You're asking for a $10 million loan. They want to know who you are. Financially, does it sound financially feasible for you to go out there to get a $10 million loan? Okay, so in a nutshell, in the very, very basic package, that is normally what we look at to evaluate a project. Now, once the project is a go, now obviously we need a lot more documentation, but that is behind the scene. You might not even see them. For example, the lender need to order appraisals. In some cases, they might need to order environmentals. They want to order phase 1, phase 2, so on and so forth. Obviously, they need to order title, make sure that the land is clear. There's no liens or whatsoever. If there's a mortgage on the loan, they need to see the mortgage statement, so on and so forth. But initially, these are the package that we need to complete to submit it to the lender for them to evaluate this construction. So let's talk about each one of them. Executive summary. Now, if somebody is building just one single family home, you don't need this. Pretty simple. Just give us the construction budget. We will evaluate what that is. Executive summary is normally for a much bigger project, commercial buildings, apartments, retails, so on and so forth. So what is an executive summary? From the lender's perspective, they don't have the time because they see deals like this on a daily basis. They see so many deals like this every single day. They don't have time to listen to stories. They want to see what do you have. So an executive summary is pretty much like a business plan that the principal put together to tell the lender in a very, very high level what this project is all about. Without looking at anything else, the first thing all the lender will look at is your executive summary. So sometimes we will run into a client to just give us one page of Word document titled up executive summary. Can you do that? Yes, absolutely. But it might not be attractive enough for the lender to take that deal seriously. And remember, you're asking the lender for millions of dollars. So the first impression is very, very important. I always talk to my client, if you're asking the lender for tens of millions of dollars, you better have something that is presentable so that the lender will take you seriously. I see a lot of builder do this thing by themselves. Nothing wrong with that if they are experienced, if they know what to put together. But I see a lot of builder, especially new builders. They're doing this thing one time, two time, not that much experience. They put up some executive summary, just look like an elementary student put something together. and you use that to ask for $10 million. Most of the time when lender look at something like this, they will just put it aside and they won't touch it. Because when they look at the executive summary, the lender looking at two things. The number one thing, you would think that they're looking at what the project project overview is. Yes, that is the one thing that they will look for. But also the second thing that they will look for is that they want to see how much effort this client put into this project. Again, if you are building a hotel, you're building a multi-million-dollar buildings that cost about 10, 20, 30 million dollars, and you don't even put time into an executive summary to present it to be a presentable executive summary, the lender would not, it would not be attractive for the lenders to take you seriously. So those are the main reason why we ask for an executive summary. Okay, so what should be in the executive summary? It's just like when we are in college, we are writing papers, right? So what, where, when, where, how. Those are the most important things the lender is going to ask for. The lender is going to look for. Now, we are not asking you to write executive summary. No, not at all, right? But what we ask you to do is that when you receive that executive summary, please, just for out of curiosity, read it out loud. Ask yourself, if today you were that lender that is about to write a $10 million check, if somebody presents something like this to you, would you be interested to write him that check or even talk to him, right? So in an executive summary, the lender is looking for the following things. What are you doing? What are you building? You're building a multifamily. You're building a 32 unit. Okay, very good. You need to tell them what are you building, and you need to tell them why are you building it. So you're saying that, okay, fine, because the city right here is overpopulated, the housing is short, and multifamily product like this, it's not many out there, so it makes a lot of sense for me to build a building like this. Okay, we had a case in Las Vegas a few years ago. The client is actually building a hotel. He wants to build a hotel. Looks very good, but when they ask him, why are you building a hotel in that area? When you look at that area, there's so many hotels already. Why would you build another hotel? What would you do differently to attract more people into your hotel versus just another hotel, right? So again, lender is going to ask a lot of those questions. They want to see, does it make sense even for you to build something like that, right? Now, if you are back to a single family home, when you build a single family home, let's say in the area, the average price in the area, let's say it's $1 million. And now you are building a $3 million home. Now the lender might not approve it. Why are you building a $3 million single family home in a neighborhood that it's only worth about $1 million? It does not make sense, right? So that's what the lender is looking for. Why are you doing something like this? And now, of course, you need to tell them who is doing it. You need to, in that executive summary, especially for big projects, like you're building a hotel, they want to know who is building it. Do you have any experience of building something like this? And after you build it, who is going to manage this hotel? Are you going to manage it yourself? Are you going to hire a third party to manage it? Are you, have your in-house management team? Whatever that might be. So they want to know who is the management team that manage this project. Especially the bigger the project, the more intensive the lender would like to find out who the principal is and what kind of experience that they have. So that is what executive summary is. And of course, in that executive summary, you also will let them know that what is the high level budget. So in this case, you're saying that, okay, I need $20 million. And the $20 million break it down to $1 million for the land and $2 million for the for the laying the foundation, so on and so forth. So it's a very, very high level budget to show them what the budget would be. Of course, the performers and so on and so forth. So again, executive summary is the number one thing that the lender will look for any construction projects other than single family home. Now, if you are building 3 single family home, yes, they want to see it too. They want to see an executive summary. Why are you building 3 single family home in that neighborhood, right? So executive summary is the first thing that they will ask for. And that is what we will ask for also. If you submitted any big construction loans, you will see this list. So that's the first thing. Now, second thing, it's what we call the construction budget breakdown. Construction breakdown. Sorry, I should say construction budget breakdown, not construction breakdown. Okay, sorry about that. Construction budget breakdown. So the number got to make sense. Now, let's talk about a single family home. A single family home normally is pretty straightforward, but the lender would still like to see what the budget looks like. Back to the same example. Let's say the area worth about $1 million. Okay. Now you're saying that, okay, fine, I need $1 million loan to build a house in that area. Does it make sense? Most likely it doesn't make sense. Why? It's because normally in the construction, in construction, the cost to build the house, it's approximately 70% of the after repair value. So for example, let's say the value is $1 million. Okay. The construction budget should not be more than $700,000. Sometimes even less, depending on the area. Right. So now if the value is $1 million and you are asking for $1 million loan, that means that you are building a house value more than $1 million. So in that case, the lenders would not feel comfortable to approve you that number. All right. Now also, now we are talking about something that is more complicated. Let's say you're building a hotel, right? Now, when you build a hotel, it's very, very important for the investor or the principal to communicate with a GC, with a general contractor who's actually building the hotel. Normally, they will interview a few different GC and have them to provide their construction budget. And now, basically, different GC is going to bid on the job, right? So as an owner, I'm going to interview 3 or 4 different GCs and look at their budgets, look at what they're trying to do. And now at the end, I decide which one I need to go. So the construction budget, it's supposed to be professionally written. Now, sometimes I do see construction budget coming into into our office. It just have 3 or 4 different lines saying that, okay, I need $10 million, $1 million for foundation, $2 million for building, another $1 million for this and that. You need to break it down. That, besides of the executive summary, the executive summary attract the lender to spark the interest for the lender to look at the project. Now, once they get through the first filter, now they really look into the construction budget in depth. They look at the numbers. We are dealing with the lender that we are dealing with. They have been in the industry for a long time. Some of them, they've been lending for construction projects for generations. They understand their numbers. Once they look at it, they know this thing is for real or not. So it's very important for our clients to get something that is it's professionally written. So let me show you one of the budget that this is one of the deal that we actually close. So this is the budget, okay? So now, as you can see, this is what the budget looks like. Now, don't get intimidated. You don't need to understand this. Don't need to, okay? But at least when you get the construction budget, try to read through it. See if it makes sense to you or not, right? So you're looking for something like this, insurance for $4,000. That's reasonable. Now, if this insurance were become $40,000, now you have a big question mark. How come $40,000? That's so expensive, right? But anyway, so again, as you can see, you look through this. Insurance is $4,000. Foundation is about $100,000. See, for this one, it's not just a round up number. they actually put into the labor, into the calculation and the hourly rate, so on and so forth. It comes up to be $104,554. See, it's very detailed, right? So when the lender look at something like this, now they know this client actually put in effort to produce something like this. So as you can see right here, this particular project, as you can see, now it also tells you what is the original cost would be. And then it also tells you this is the original one, but as long as he progressed into building this property, now the number changes. So for example, let's say the foundation right here, originally he estimated $104,000, and now it become $107,000. Now this is the difference right here, so on and so forth. Now it also tells you which contractor he's hiring to do this kind of work. So as you can see, something like this is very, very detailed. So construction loan, is it difficult to get? No, it's not difficult to get. As long as the budget, it makes sense and it's detailed, then it will be much easier for the lender to approve the loan, right? So here you can tell that the total construction budget for this particular one is about $2 million. That is what he needs to build out the whole thing. Now, how much he needs? He needs approximately $597,000. So this particular project right here, we just funded 2 weeks ago. This client is building a single family home, building a property, and he's over budget. He cannot get the deal done. So he's about $600,000 short, as I can show you. He came to us asking for a deal, and long story short, we funded. And I'm going to show it to you later on what this thing is about. So this is what construction budget really is. So it's very, very important. This is another important documentations that we need to look at. The next thing is what we call pro forma. Pro forma, again, I mentioned it already. When you build something to keep for a long period of time, many people building a hotel, they don't build a hotel itself. Nobody would do that. Most of the people build a hotel and keep it and operate it themselves. They build hotels or they build warehouses. Nowadays, there's a lot of businesses, they need warehouse. They build warehouses, okay? Or retails, multifamily, so on and so forth. So the lender would like to know, after you build something like this, what is the pro forma? How much this building is going to generate you? So for example, let's say you are building a $40 million hotel, but your monthly income, when they look at your pro forma, your monthly income is only, let's say, $100,000. Is not even able to support that loan. Now they will have questions. Why would you build such an expensive hotel and you cannot even generate enough income to, to make a profit out of it? So that way, the client needs to do another study also, very, very careful study to understand, what the market is, what the market rent is, so on and so forth. So same thing, if you are building, oh, sorry about that. Okay, so let's say if you are building multifamily, after you build it, how much can you rent it out for? Okay, so along the way, the lender is going to help the builder work together to make the deal, to have the deal make sense. So give you another example. This deal we did not close, but it's a very good learning experience for all of us. So we had a client out in San Francisco try to build a condo. Okay, so he's trying to build 120 unit condo. So what is a condo? A condo is that after you build, what happened? You sell all those units, right? So that's what condo is. Doing the underwriting, obviously COVID started it. A lot of things changed in California, in the Bay Area. So the lender did a feasibility study and found out that there's a lot of empty office building, because originally when he built this 120 units, it was geared toward the young professionals who's going to be working downtown San Francisco. But now all of a sudden COVID hits. Nobody go back to the office to work anymore. So on and so forth. So now all of a sudden, building condo does not attract to the client to the lender anymore. However, the lenders still like the project. They still like the location. They still believe in the project. So now, instead of building a condo, now the lender convinced the client to build an apartment instead of condo. It's the same thing, but apartment is you do not sell individual units. You keep the entire building, and now you can rent it out. When you rent it out, now the building will have income coming in. Instead of you building a condo with the economy like that, they don't know if you can sell it or not, right? So again, it's very important for the clients to produce the proper documentations so that the lender can actually help them to evaluate the project. Ultimately, the lender is the one that is taking all the risk. They give you 20, 30, $40 million to build something this. Their job is to help you to see that you become successful. You can go out there to have a good product. You can either sell or rent it out, that they can get their money back. So think about this, once you build an apartment and you can rent it out, now what happened to this apartment? It become a stabilized apartment, right? So when it's become a stabilized apartment, it's a multifamily. You can definitely refinance for a long-term note. Now the lender can get their money back. Okay, so that is why they want to see a pro forma, to see what this building can do. So just to give you another example, so this is one of the hotel that that we are working on in North Carolina, and this is what the pro forma looks like from this particular client. So after he built it, they tell us that, hey, year one, this is what the income looks like. Year two, year three, year four, and of course they also show you that different type of rooms. There are occupancy rate. You can see that on year one it's 85% occupancy rate, because obviously it's a brand new building. It takes time to get to to get up the occupancy ratio. So now you can see that in year two, the average occupancy ratio is about 90%, and then so on, and then follow that is about 95%. With this particular one, 95% is actually a very, very good occupancy rate, just because of the location of this particular hotel. And now you can also see the guest room right here. He projected the first year is about 1.9 million, the second year is 2 million, so on and so forth. So again, you can see this particular client is actually put in the time to study the market, to study the market rent, so on and so forth, to come up with something like this. And now the lender can base on something like this, on this number, to evaluate this project to see if this thing makes sense or not. Okay, so that is the next thing that we talked about, is called pro forma. Next thing is called track record. Track record, it's for the lender to understand who are they dealing with. When clients come to us, oftentimes they're saying, hey, Alan, this is a good project. Man, I'm going to build this hotel. I'm going to build this apartment. I'm going to build this thing. It's going to make a lot of money. The ROI is very, very good, so on and so forth. Very good. Okay, fine. You can send me the executive summary. I can understand all those things is it really good or not. But the most important thing, a lot of people, when they send stuff to us, they never send us the track record. Track record is just like a resume. Now, again, if you are building just one single family home, it's pretty simple. But now, if you're talking about building a hotel, things like this, now the lender would like to see your resume. Have you built hotel before? What kind of project have you done? Now we have builders in the past that come to us saying that, hey, I have all this experience. I've done this. But what role did you play? Perhaps he was just a supervisor. Perhaps he just somebody that installed the door of that hotel, right? I mean, the lender would like to know, what role did you play in that particular project? So a resume is very, very important. Now, on a track record, you will, especially for, let's say, for single family home, okay, the lender in today's market, At the beginning, I told you that, hey, if you come to me about a year and a half ago, 2 years ago, I can give you a construction loan regardless who you are, as long as you can hire somebody that has the experience. But today is totally different. Today, if you don't have any experience, lender's not going to give you any money. Okay, period. So they want to see what have you done in the last 36 months if you are building just a single family home. So here, I'm going to show you another track record, right? So this guy, we funded him. I'm going to show you his project also. We funded him about $8 million. He is a builder in the Bay Area. They're building single family homes. But for him, he's building 8 of them. Each property, he needs about $1 million. So we need to find out what kind of experience that he has. So this is what a track record looks like, okay? So a track record is pretty simple. So you listed all the property that you have done before. Give us the address. So from the address, we can put it out from public record to see the history of that track record. So here I can see for this particular one, he purchased for about $1 million, and the budget is about $300,000. And now the value of the property at the end is about 1.4 million. So this guy right here, also another one in San Mateo, now he's saying that this is a ground-up construction. Good. So he built a ground-up construction, about $1 million home. He put in about $550,000 cost to it, and the after repair value, or the final value, is about $2.1 million. So now all these things are record. We can track. Now, some of the client might come up to you saying that, hey, I used to work for a construction company. Okay, I used to work for a construction company. I know how to do all these things, but all these things are actually under the company's name. It's not under my name, but I know how to do all these. Would that count as an experience? Well, the question is that, can we verify? How do we verify that you actually know how to do something like this? Okay, now there's one way to verify, is that if they are really the contractor who pulled the permit, then on that permit, it got the contractor's name on it, even though the property is not under my name, but under the company's name. But because I pulled a permit, I got my name on it. So in that case, yes, I can count as experience. But if my name is nowhere to show whatsoever, I cannot verify anything, even though you have been in the industry for 20, 30 years, you know how to build a whole building from ground up. If we cannot verify it, I'm sorry, we cannot use it. It just no experience, okay? Now, what if an investor saying that, hey, I have no experience, but I own this piece of land. I hire somebody who has all the experience in the world. Can I use that contractor's experience? The answer is yes, but the two of them need to form an LLC together to get this loan together, because the lender is not going to give the investor a loan when the experience is from someone else that is not in the loan. Does it make sense? They want to tie everybody together. And as a matter of fact, that it's actually protecting the client also, because you don't want to hire somebody to come in here to build a house for you, and then for whatever reason that builder walk away and you have a half-built house, and you have to end up looking for another builder to come in here to finish up the job. That is very, very ugly. Nobody would like to see that. So the lender would like the two of you tied together. Now, this is only for single family home. If you are building much, much bigger project, for example, like I mentioned, hotels or apartments and things like this, in that case, they don't need the contractor to be on the loan. So in that case, it's heavily based on this, the investor. Does the investor have any experience or not? And if the investor have never built anything before, this is the first time, and he's asking for $10 million, $20 million, most likely it's not going to fly. So he needs to find somebody who has experience to come in together with him. Okay. So track record, experience, it's very, very, very important. So we talked about a few things already. Executive summary. We talked about construction budget. We talked about track record. Okay. Now, the next thing, not the least, we need to see its personal financial statement. So when you building a house, when you're doing a construction project, the lender give you X dollar amount of money. You will start to pay them back, just like a mortgage, right? Many people saying that, hey, when I get the money, can I pay you back at the end? No, it doesn't work that way. So they give you a 18 months of construction period. Now on month number 1, you will pay them back interest. Okay. So now the lender would like to find out, because the building itself does not generating any income. The building, the fastest that you can generate income is at least, 18 months, 20 some months later after you built the entire project. So during this period of time, how are you going to pay me back? How are you going to pay me the interest? I need to know. So that is why they want to find out what kind of liquidity that you have, or what kind of net worth that this client has. Hey, just in case if something goes wrong, I know what I know who I can go after, right? As a lender. So personal financial statement, it's very, very important. Sometimes I see PFS comes in, they're asking for $10 million, but they're saying that on their bank, they only have $2,000. It's not going to work that way. So rule of thumb, whatever you ask for, let's say you ask for $10 million, that person or that group of investor, their net worth should be approximately equals to what you ask for. So let's say you have $10 million. So now when you look at your personal financial statement, your checking, your stock, your mutual fund, your retirement account, your real estate, your your shares with another company, whatever that might be, all those things add together would be approximately $10 million. Now, does it have to be exact? No. I mean, it could be 7, could be 8. But if you're asking for $10 million and your net worth is only 1 million, it's not going to fly. I can tell you that much, right? So that is why the lender is going to ask this is also a very, very important document. And that is what we look at also, because from a broker, we are not a lender. We are not a builder. So when you give us the construction budget, when I look at the construction budget, hey, it might make sense to me. It might not make sense to me. I don't know what to look for. But what we look for is the PFS. So they're asking for $5 million, and I look at what they have on the PFS. If it doesn't make sense, we kill the deal right there. You need to show me more liquidity before we can move forward. If you cannot even show me that you have the money, don't waste time. Okay, so they have to have net worth approximately equals to the loan amount that they're looking for, and plus they should have approximately 10% of the loan amount as liquidity. So example, let's say if they're asking for $10 million loan, they should have approximately $1 million liquid. When I say liquid, means that they can get the money tomorrow. That $1 million is not going to be in the real estate. It's not going to be in some sort of a goal or anything that you cannot get out. You can get that money out anytime that you wanted to. So normally that's what the lender is looking for. So personal financial statement is very important. Now, what if there are 2 different people or two different investors? Same thing, 2 different investors, then we need to see 2 different personal financial statements. Okay, so those are the things that we look for, and that is the package. That is how the lender will evaluate a construction loan. And that is what we need to evaluate a construction loan. So once that package comes in, depending on how difficult the project is, it might take between 2 days to 2 weeks or even 2 months to evaluate this project. Does it make sense or not? During this period of time, there will be many, many conversations between us with the client, between the lender with the client, and we requesting more and more documentation. And once we start going into underwriting, more documentation will require. For example, like permits, in licensings, engineering drawings, so on and so forth. So there's a lot more things behind the scene. But at the beginning for construction, what I want everybody to know on today's seminar is to understand initially, what do we need and what do you need to look for? Okay, so here I'm going to give you an example. So this particular one I showed you already earlier is that this is the project in Bay Area that we just funded. This no, not just funded, we funded last year. This is the client that building 8 single-family homes, all luxury homes. According to him, he will spend approximately $2 million on each home, and after he's built, his property worth about $3.5 to $4 million. So we looked at all these things, looked at the construction budget, so on and so forth. We feel comfortable. We gave him a loan. Now, for this particular one, we did not give him one loan of $8.1 million. We gave him 4 loans, okay? 4 loans, approximately $2 million each. So the reason behind it is that, first of all, from the lender's perspective, if they give him one loan of $8.1 million, it's very difficult for the lender to turn around and to sell it to the secondary market. Now, we all know all of these lenders, when they fund a project, after they give out the loan, the $8 million is gone. It came out from their account. Now, how do they get that $8 million back? Many of them do not keep that loan. They turn around and they sell it to the secondary market, like Wall Street's, other investment companies, so on and so forth. So that is how they get their money back. So it's much harder for them to sell a $8.1 million loan than a $2 million loan. So for this particular project, we gave them 4 different loans and approximately $2 million each. So we get this thing done, and the guy is building the house right now. So that is that particular project. The next one, this one we funded this month, 2 weeks ago. This is not a project in California. This is the mid-construction build out. I mentioned that this is a guy that building a single family home. He used his own money to do it, run out of the budget, and it's a ground up construction. And he already put in about $1.5 million of his own money, and he's short about $600,000. So came to us. Again, he's an experienced builder, so on and so forth. Everything checked out. So we funded him $600,000 about 2 weeks ago. So can we do construction? Absolutely. We do a lot of construction loan. And as a matter of fact, we have like 3 or 4 other construction loan in the pipeline right now. There's another one about to close. It's about a $3.5 million deal. There's another one that's about to close. Hopefully we can close. It's a $16 million deal. I'm going to share with you that once that is done, so on and so forth. So again, yes, we definitely can do construction. And my experience, construction is actually not that difficult to get as long as they can show experience and they can show liquidity. So those are the 2 things. Those are the 2 most important things that, anybody need to look for. Okay. So again, guys, that is all I have for tonight. And we have about 10 more minutes. And if you have any questions, feel free to open up the floor. Let's talk about different type of, scenario whatsoever. So the floor, it's yours. Any questions? Feel free. Okay.
I have a question.
Yes, ma'am.
Okay, so I kind of put in the chat. So basically, I was kind of wondering, like, how do we do partnerships with you, or what number can we call? I have a portfolio of 15 great properties, and I just need a partner who I could possibly buy out with a higher interest because my credit score is a little low. I'm a loan officer as well, of course, but I did start as someone searching for loans. So I work in insurance and portfolio, and we may need construction loans later on, but all of these would be technically DSCR loans. But I know you guys, when I spoke with him, he said he would only be able to go up to 55%. So for the other 55%, I spoke to, I think, James Harden, who I believe tried to get a hold of someone as well. And he said that, there may be partnership opportunities. So if you saw like a good property, if I gave you a portfolio and you saw a good property, or a few good properties, would you guys be interested in doing a partnership? And what would that partnership look like?
Let's talk about that offline.
Okay.
Again, obviously we need to know more detail about this. So I put my phone number in the chat. So feel free to give me a call and let's look at what your portfolio looks like.
Okay,
And
great.
yeah, absolutely. I mean, we open up to all sort of opportunity right here.
Perfect. Thank
Yep.
you.
Sure. Thank you so much.
Thank you.
I see somebody asking, is the loan a recourse? Very, very good question. Is the loan a recourse? What does it mean? A recourse loan. Recourse loan means that, hey, when the lender give you a loan, if it's a recourse loan, let's say for whatever reason, you cannot pay the loan back. The lender, after they foreclose the property, if there's still any shortage, they can still come after you as the principal. So that is a recourse loan. Obviously, non-recourse loan means that, hey, if the lender give you that money and something happened, you cannot pay them back, the lender would not come after you for it. They will just foreclose the property and take whatever that is. So that is recourse and non-recourse. So for most single family construction, it is a recourse. Most single family is recourse. But now for most commercial, when I say commercial, apartments, mixed use, so on and so forth, and especially those big projects, 10 million, 15 million, 20 million, most, I would say 99.9% of them are non-recourse. Okay, so that is what, so that is that. Okay, I don't see anything in the checkbox anymore. So anything else? Can we do international development projects? Yes, but honestly, international development, it's difficult to do, and especially with today's economy. We all know the economy, not just here in the United States, in the whole world, it's not that good. So as far as we know, a lot of the capitals are actually coming back to a lot of the capitals are actually coming back to the United States. Now, unless the project is very, very good project, I think it's, it's not, again, I mean, we would take a look at it, but it's not that easy to get it close, put it this way. Okay. We can definitely take a look at it. As a matter of fact, we have somebody that called us from Canada today that they're looking for $36 million construction loan. That sounds pretty interesting. So one of our lenders looking at it right now. Okay. So the short answer is yes. Have a great, okay, great. Thank you so much. What other country do we do business in? I would say right now in today's market, focusing here in the United States, because a lot of the capitals are coming back into the United States. And just here, you already have so much business to do. If you're talking about going into other countries, first of all, the project got to make sense. The loan amount got to be big enough. In Canada, they're talking about minimum 5 million. Even 5 million is too small a deal for many of our lenders. But if you're talking about other countries, for example, like going to Europe, things like that, you're talking about in the 20, 30, $50 million range. So it's not easy to get them close. That's the first thing. The second thing is that the country that we go into, it has to be politically stable, has to be friendly to the United States. Okay, so that is what happened. What time can we talk tomorrow? Anytime, Rhonda, just give me a call. Okay.
Alan?
Yes, sir. Who's this?
This is Damon from Chicago.
Hey, Damon, how are you? Yes, sir.
Fabulous, young man. Hey, I wanted to find out, I had a person who contacted me today and wanted to know, can we do 100% funding or 100% financing on real estate or construction loans?
There's no such thing, buddy. We are talking about commercial. Commercial, the number one thing the lender all afraid of is that the principal has no skin in the game. Okay, because when you're talking about 100% loan, now if something goes wrong, the principal or the investor can just walk away. Now, all these lender who put money in, they are the one that taking all the risk. The lender do not like that. They always want to see you as the principal to put skin in the game. Now, that money come from you? They don't care. They need to see liquidity. They need to see equity in the deal. So, for example, let's say you're talking about $10 million deal. And hey, I don't have no $10 million. I might have $100,000, but I go out there, I raise money. I raise about $3 million, and I go out there to borrow $7 million. Does it make sense? That's fine, as long as there's equity in the building, in the deal. They're fine, right? So, but if you're talking about 100% financing, can it get done? Yes, very, very hard. But but again, I mean, it's not recommended.
Okay.
Yeah.
Thank you, sir.
Yes, sir. Anyone else? Okay, if not, don't forget this Saturday we will be in Wilmington, Delaware. Okay, would love to see you all there. Last question is about credit repair. I have been getting leads about it. How much is for repair? Okay, so for credit repair, I would say the cost is somewhere between $600 to $900, depending on how bad the credit is. So if they need, fill out the credit repair scenario form, submit it to us. We look at what the score looks like, and we will give you an estimate. So it's somewhere between $600 to $900. That is from one credit repair company that we are using. Now, obviously, we have many other credit repair companies, and somebody charging like $1,500, somebody charged like $3,000. Again, I mean, they provide so many extra service. They're all good companies. There got to be a reason for the extra cost. But the minimum cost that just to fix the credit, nothing else, is between $600 to $900, somewhere in that range. Okay, Solomon.
Hi. Just wondering, is there a webinar for this Saturday or next Saturday? Because I just registered, but I won't be able to be there in person. Was there a way that we can listen?
That it's actually a live event, so I'm not the one that hosting it. So we need to talk to the host. Would they have any means for doing streaming like this? But
Okay.
but I don't know. I'm sorry, I don't have that answer. But we try to record as much as we can. So for example, like trainings like this, we always record it and post it onto our YouTube channel.
Perfect. Thank you.
Yep. 600, 900 annual. No, not an annual cost. That is one-time thing. As far as I know, it's one time. Can a list pendant stop someone from submitting an application? It could be. Again, I don't know the detail of it. It could be. Because again, when you have a list pendant on it, we need to see what the detail would be to tell you exactly, if we can do it or not. Okay. Caribbean islandings. Personally building now in St. Lucia. Send us the deal. Let us know what it looks like. I can give you an answer pretty quickly if we can do it or not. As a matter of fact, we are doing a deal in St. Crux right now. I think that deal is about $40 million. So the lender is interested in it. So yeah, they're looking at it right now. So anything is possible. That has been waiting since May 8th for responses. Contact support. Yes, contact support, Samas. Sorry. Contact support. They should be let you know exactly what the status would be. So anything that you need, send an email to support@letsellending.com. Okay. Okay, ladies and gentlemen, so it's 9 o'clock and another episode of Sequoia Lending. Remember, we are not here to just do one deal or two deals. The platform set up so that for us to disrupt the commercial lending industry. And that is why we are going from city to city to city to let people know about who we are, what we can do. So help us out. We need you. Next time when you come to training like this, next time when you know there's an event, even though you're not there, hey, invite somebody to be there. So it doesn't hurt. Okay. So guys, thank you so much. And I see you next week. Good night, everyone.
Thank you, Alan. When are you coming to Houston?
Thank
When
you.
would you like me to go to Houston? I would love to go there tomorrow.
Okay, I'll look.